Hi traders, let's now have a look at an example of a bearish bat, and we're currently looking at the 4-hour chart. So the first thing we want to do is look for higher time frame key levels of resistance. And if we just have a look at this sort of market here, you can see very choppy price action. I just compress this for you. And what we want to do is we want to look at the major swings. Okay, so from the very high here down to the very low is where you want to look to draw your fibs. So we draw the swing in here. You can see prices retraced all the way up to that 70.7 area and released to the downside. So if you just take your horizontal support resistance level, just drop this down, you can see this area in here where prices held previously. We have resistance, support, for sort of support there, holding as resistance again and again, and then we come back to the area. And if you have a look at the level just below that, look at that 62 area, also a very nice clean level of support resistance. Remember, they are zones, so we're not looking at specific numbers, and you can see we're dealing in around 30 pips, somewhere around there, 40 pips in range. So that's the area of interest, that's the area of resistance. So you can mark that level off there. And what you want to do is, in a market environment like this, you can look to structure trading opportunities or patterns inside this range. If we now move to the hourly chart, you can see this is the rally. Look how clear it looks on the hourly chart. This is the release, nice release to the downside, nice selling pressure coming into the market, and then price starts to retrace. So once we get this initial move down, just zoom this up, we can look to label this the XA swing. So there's the Fibonacci swing down, and if we just draw this in here, that would be the X, that would be the A. Then price starts to retrace, so we can see we rally up to the 38, retrace a little bit, rally up just past the 50, and start retracing again. So if we draw a Fibonacci from the low up to this high, you can see we have the 886 lining up with the 1618 extension. Now that forms your bearish bat pattern. If we just highlight that area right there, so that's the level of interest to us, and we just move this line here, you can see that's 62% and the 70.7 from the 4-hour chart coming in play on the left hand side. Just adjust this line, so there's the 886 level, and that's the level that you want to be looking to place your limit sell order. So if we trace this pattern in, you can see we've dropped nicely, we've rallied up just past the 50, now started to retrace again. And remember, on this initial retracement here, so we've got the X, A, B, C. On this C retracement, you're looking for a minimum of 38%, and you can sort of go down into the 886. So that's kind of what you're looking for. And what we're looking for now is we're looking for that move to the upside. So we just follow price along. You can see price spikes up like this. Have your order set, okay? Have your order set. So what we're going to do now is we're going to go to the pending order. We're going to put an order to sell right up at this 886 area, which is at 43.67. We'll put it at 65, a couple pips below, and we're going to put a stop loss just above the highs here. So 30 pips, let's go around 40 pips should do the trick. Okay, if the price takes the highs out, the pattern becomes invalid, and then you obviously want to be out of the market. And targets, again, we'll keep it simple, we'll go down towards this 886 area, around the 140, 140 area. Okay, so we'll put that in place. So we've got a sell limit at 65, targets about 224 pips for risk of about 40. So very nice risk reward, and that's what's going to the bat patterns, they very good at doing that, okay, because the stop goes, as with the Gartley and the head and shoulders, goes above the highs or point X, and the targets, like I said, the lows are pretty good places to take profits. You can also target the extensions. So let's just follow along. Okay, price has now filled us in this this pattern or this trade. You can see our pending order currently 8 pips down, currently 24 pips down. You can see stop above the high, so if you run into trouble, price continues to the upside, you're out of the trade. Okay, so now price is starting to release to the downside. Be careful not to move your stop to break even too quickly. Price is now starting to break down nicely. You can see if you'd move your stop to break even, having been up 50, almost 60 pips, you would have been stopped at break even. So just be very careful about that. You need to give the market time to breathe, because you've actually just taken the highs out. You almost hit the stop loss. Alright, now we're starting to break down. You can see we take these lows out and actually close below the lows. Currently up 75 pips. Here again, you can move your stop to break even when you start hitting these key areas. You see this area of support in here. If you want, you can move stop in there. We will go over and discuss the actual trade management side of things. But for now, we'll just keep it really simple. You can see up 172 pips on this one. And price is now sort of finding support down towards the lows. And we've just been filled on our take profit. So 225 pips. You can see it just took over, sort of a day here. But that's the bearish bat pattern. Here we can find a key resistance. Price comes up, hits the level, starts picking up the orders around the area. It takes a while to get going. Okay, very common for it to do that. And then we see price release to the downside. So that's just your bearish bat pattern.